So if you've taken a peek at your crypto portfolio lately, you've probably noticed it's, well, a sea of red. After a really strong start to the month, it seems like the market has just hit a wall. In this explainer, we are going to dig into the numbers and the news to figure out exactly why crypto is in correction mode.
All right, this is the big question, isn't it? It's on every crypto investor's mind. We had this great bullish momentum and then, bam, 7 straight days of falling prices. Why? Let's break down the data and see what's really going on.
To really get the story here, we've got to look past the headlines and get into the nitty-gritty. So what are the actual numbers from this past week telling us?
7. That's the number of the week. For 7 consecutive days, the crypto market has been sliding downhill. And look, this isn't just some minor blip on the radar. This is a sustained pattern, and it's definitely making investors a little nervous.
And even the big two are feeling the pressure. Bitcoin has dipped about 3% for the week, which isn't great. But Ethereum, it's taken an even bigger hit, dropping a full 6%.
So in real dollar terms, that puts Bitcoin hovering right around that $108,500 mark, with Ethereum sitting near $3,800. And for traders, these aren't just random numbers. They're huge psychological levels that really shape how the market feels and acts.
Okay, so why now? What's going on? Well, it's not just one thing. It's more like a perfect storm of different factors. Everything from a market rally that just ran out of steam to these bigger fears about the global economy as a whole.
And this timeline, this really tells the story, doesn't it? October kicked off with a bang. Bitcoin hit a new yearly high, and everyone was feeling super bullish. But that optimism just vanished, almost overnight, when the US announced new tariffs on China. That sent a shockwave through all kinds of riskier assets, including crypto.
And that shockwave? It triggered a flash crash that wiped out a staggering $19 billion from the market. A number that big isn't just about people panic selling. No, it's a brutal reminder of just how much leverage is in the system. Where traders are borrowing money and their positions get completely wiped out in an instant.
And beyond just the trade news, there's a bunch of other stuff going on. You've got these storm clouds of macro uncertainty, things like inflation data and those ongoing trade tensions. The U.S. government shutdown means key economic reports are delayed, so it's kind of like we're all flying blind. And then you see some whale activity, like a single person moving over $500 million in Bitcoin onto an exchange, which is usually a pretty classic sign that a big player is getting ready to sell.
So, with all these conflicting signals flying around, how are the professional analysts making sense of it all? Let's take a look at what the experts are saying.
Well, the folks over at the CoinSwitch Markets desk, they see Bitcoin basically in a holding pattern. It's not crashing, but it's definitely not rallying either. They're calling this a consolidation phase, where the market is pretty much just waiting for its next big signal to make a move.
And what exactly is consolidation? Think of it like a tug of war. It's a period of total indecision, where you have buyers on one side who think prices are a good deal, and sellers on the other side who just want out. Right now, neither side is strong enough to win.
Now, what's really cool about this is how you can actually see that tug of war in action. We've got what we call support levels. Think of these as a price floor, where buyers tend to jump in and stop the price from dropping further. On the flip side, you have resistance levels, which act like a ceiling, where sellers take control and stop any rally. And right now, Bitcoin is just bouncing between these two forces.
But listen, not everyone is focused on the short-term fear. Satvik Vishwanath over at UnoCoin has a totally different perspective. He's pointing out that, while everyday traders might be nervous, the big money from institutional investors is still flowing in. So in his view, this is just a temporary cool down, not some fundamental change in the long-term upward trend. And that right there brings us to the central conflict that's defining the market right now. It's a real battle between two very different ideas of what's coming next.
This slide pretty much captures the entire story in a nutshell. On one side, you've got all those bearish pressures, the short-term fears we've been talking about. And on the other, you've got this powerful, long-term bullish trend that's driven by fundamentals like limited supply and more people using crypto. The market is just trapped between these two massive forces.
So this leaves us with one last kind of provocative question to think about. In a market that's maturing and facing some serious economic headwinds, should we maybe redefine what a win looks like? Perhaps the new bull run isn't about a crazy sprint to the moon, but more like a marathon of just cautious consolidation. In today's crypto world, maybe just holding your ground is the victory.